Manish Dhanuka is the managing director now joining in. Thanks so much for taking time out. Now, Mr. Dhanuka, the last 3 years, a lot has changed for the company. Financials, for instance, have improved quite significantly. You have a net cash on balance sheet now. Your products are doing well. What's the outlook over the next 3 years? What are going to be some of the key triggers?
Good morning and thank you for having me. We've out big growth plans for Orchid Pharma. We have multiple optionalities working in our favor. Besides the existing business of the API that's thankfully doing well, we are developing NDAs for the US market, and we should be in a position to file few NDAs in the US for molecules which hopefully will not have too much competition. Then we have this PLI business. We have procured the PLI for a key intermediate of pharmaceuticals called 7-ACA. This intermediate is based on fermentation technology, and it is imported 100% from China as on today. And we are setting up a manufacturing facility to manufacture this product. So this will be other second optionality, which will generate growth with respect to revenue and the bottom line. Then we have recently signed a sub-licensing agreement with GARDP and Shionogi for a patented product of Shionogi, which is known as cefiderocol. This is a very important molecule, not just for India, for the healthcare industry of the entire world. As you may have heard, these days the world is facing a very big challenge of antimicrobial resistance. Based on some estimates, almost 1.5 million people died due to antimicrobial resistant bacteria. And cefiderocol is a molecule which works very well against some of these resistant strains. So we have backed this, we have got this sub-license for manufacturing this product exclusively for 135 low-income countries, and Orchid would be manufacturing this for the entire world, including India. Then we are proud to say that Orchid has developed a new molecule. It is a combination antibiotic, and Orchid has filed for the clinical trials with the Indian regulatory authorities. And once this gets approved, this would become our proprietary molecule in India. Orchid is also entitled to get royalty on its worldwide sales, and we hope from the next financial year, the sales would start in the US and Europe, and that would bring a significant bottom line directly to the company.
I just want to probe upon that point that you just made in terms of the geography-wise breakup of your company. You drive close to about 4% revenue from North American markets, right? With the non-compete clause with the Hospira end date 2019, you're now allowed to re-enter the US markets. How do you expect this share to actually go up for you?
That's correct. We are now working with a number of customers who are selling formulations in the US market. And we hope to get approved with a number of players in the US market. They are now qualifying Orchid as the API source. So I'm hoping that the number should increase to maybe a high teens in terms of percentage of sales.
Right, and another growth trigger could be from your new chemical entity. Is that a lot of, do you see a lot of potential here with global launch being, successful?
Yeah, so the licensee known as Electrotherapeutics, it's a German company, and they are out licensing to various multinationals in the Europe, US, and it's already licensed in China. So Orchid is entitled to get royalty on the entire worldwide sales. So we are expecting the approvals to come through in 2024.
I just want to come back to, the point that you were earlier alluding to, the announcement of PLI investment of about almost 6,000 odd crore rupees for 7-ACA. Just wanted to understand, how will this backward integration help your margins to grow incrementally?
Yeah, so just a small correction. The investment would be 600 crores. So you see, 7-ACA is a fermentation-based intermediate, and this comes entirely from China. And this is the basis of largely, I would say, 80% of the antibiotics, the cephalosporin antibiotics, use 7-ACA as its starting material. So Orchid also has a significant portion of their procurement of 7-ACA from China. I think the in-house availability of 7-ACA will definitely de-risk us against the availability from imports. It will give us the cost advantage. And also we plan to manufacture downstream products from 7-ACA, which will give us an additional, I would say, value addition, and the gross margins should also increase from that.
Okay, fair enough. And the merger of the Dhanuka lab and Orchid Pharma is underway. When is it expected to conclude, and how do you see your synergy benefits flowing in through the merger?
So the board has approved the merger. We should be filing for the stock exchanges approval soon. We are expecting the merger should go through in the next 1 year period. Both companies, Dhanuka Laboratories and Orchid Pharma, are in similar businesses. They make similar products. So besides the standard synergies of scale, like the procurement and sales, I feel that both companies have a pool of R&D scientists, and the pooling of this talent would definitely improve efficiencies in both the companies.
All right. And what about your cash position? How is that likely to be made stronger?
I'm happy to say that 3 years back, when we started with a significant debt, today we are a debt-free company. But we do have significant investment plans. I think we are well set to not just utilize our QIP, cash that we are sitting on, but also generate enough cash to fund our expansion plans.
Great to then have you on the show, Manish. Thanks so much for taking the time out.
Thank you so much for having me.